Big tech is down nearly 10% off its all-time high. And you might be wondering, is now the time to buy the dip? Because these stocks have been under pressure as people look to buy almost everything else in the market. And we got Jerome Powell speaking on Wednesday. So what is this man going to have to say? Is he going to say time to cut? Is he going to say time to pause? Or is he going to say anything at all? I would also note that we have 4 out of the Mag 7 stocks reporting this week: Microsoft, Meta, Amazon, and Apple. And for every single one of these companies, we're looking for a beat from AMD, a beat from Microsoft, a beat from Meta, a beat from Amazon, and a beat from Apple. But what's going to be interesting is whether or not people are going to discount these beats and if they even happen. Why? The market really cares about forward guidance. So, what are these companies going to have to say on their earnings call when they really talk about the future of AI and all the money they're going to be spending? Yes, I'm pondering the exact same question myself. And if we look forward here, what'll be interesting is that we also have a big question mark as to whether people are going to sell, but which is what they're doing with the Russell today, and go back into money markets, or if people are going to get a little bit greedy and look at the stats of 82% chance we're going to be higher by the end of the year and an 80% chance we're higher by the end of the year. Right now, the market is unsure. It's sitting here at neutral. So we can push back into fear. We can push back into greed. With Jerome Powell speaking this week, along with average hourly earnings and non-farm payroll coming out on Friday, along with basically the big stocks. This is one of the thickest weeks for earnings. I really want to pay attention to this. And if it's time to buy the dip, there's a few things we want to pay attention to. First thing, we want to know whether we're going to get paid for the risk we're going to put on. Yeah, I would say 82.6% chance, and an 80% chance is pretty good of either a 6 or 10% gain or an 8 or 10% gain. So if now we understand what's at stake and we focus beyond just big tech, even though it's really going to matter, look what the S&P did today. It actually managed to close 2 daily candles back above the 50 DMA. And we actually backtested and bounced off that area today. We've also had basically a dip or a 5% correction. So the S&P down by 5, the NASDAQ down by 10, but what really matters are higher timeframes. And we've already talked about this. So now the S&P is struggling to hold on to this uptrend, but it also means that we're right on support. If we look at the monthly chart, if next month we form another higher low, which is what we've done basically since the expansion started, we can see here that we got mostly higher lows. Oops, what am I doing here? Let's just remove that. Get my lines back. There we go. Delete. There we go. So ever since the low was established, we're basically forming higher lows other than the 1 month of correction. So if we take that same logic here and look out to the month of August, well, we don't want to go below where we are right now, which is at 537.45, which means we're within roughly 7 points of getting down to support. So 7 points from where we are now is like not really that far of a dip. So we can look here and see that, okay, it's roughly 1.5%. Now, if we think about the stats of 7.7, 9.8%, or let's go back to the other one, 5.7 or 9.6%. Hey, let's call it a nice even 7%. Okay, 7% if we're right, 1.5 if we're wrong. Hey, this looks like a 4-to-1 risk reward. We're going to make more than $4 if we're right for every $1 we're risking to the downside. So yes, if the pattern plays out of monthly higher lows, then I think that this is a good area to buy. But because there's so much information this week, like I said, we got Jerome, we've got non-farm payroll, we got unemployment, we got all of big tech, and we don't know if investors are actually feeling fearful or greedy. We can get a whipsaw from day to day, but what's really important is where we're going to close out the monthly chart. I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. So we talked about the S&P, but if we look to the NASDAQ, the story's a little bit worse. So we do need big tech to deliver. Why? Those are marginal higher lows. We can afford to put in marginal higher lows, but it is not optimal. Why? Because we're also getting a little bit long into this rally, and the big bars here are mostly red. This is not a guarantee we're going to go lower, but as a rule of thumb, we want to see price confirm with volume. And right now, I don't see that, at least on the NASDAQ. So what's also going to be important are other ETFs like RSP, because, hey, this was looking like a double top last month, the beginning of this month, but so far people are buying the dip, which means not everyone's going back into money markets. Some people are saying, yeah, I can take on some risk. I can rotate. And I think that's what they're saying, right? They're saying, all right, some money back into money markets, but they're looking for other areas of opportunity like financials, right? Like healthcare, which these charts look terrible. It looks like they were potentially double tops. And now a lot of them are getting fixed. But I would argue that it's going to be fairly difficult for the market to rally when roughly a third, or the Magnificent Seven, that's a third of the S&P 500. Hey, if these stocks don't deliver, if they can't at least go sideways, the market's going to have a hard time digesting these blocks as everything else tries to rally. What I think that basically means is that we could be falling back into fear here. If the market falls into fear and we also print those monthly lower lows, I think it's going to be difficult to plug the holes. And we could be headed for a little bit of a dip here, right? Back down to roughly 480. That's where I see monthly support. Also here at roughly 520. But we also know we still have these daily gaps here. We got a gap at roughly 9 and 10%. That would be a correction for the S&P 500. What I talked about until late last week was that we need the bulls to reclaim the 50 DMA. Otherwise, the bears have the edge. As of right now, the daily chart is at risk. Why? Hey, let's be a little bit objective here. What do we have? A shoulder, a head, and a shoulder. If we fall back below the 50 DMA, I don't know how we're not going to go back down and fill lower holes. If this is the bottom of the dip and the dip on the S&P, the correction on the NASDAQ, we have to advance from here. Because if now we take out the low, which is basically what NVIDIA is doing right now, rejecting off a key area, we're probably going to go down. So to make this really simple, what I'm basically watching for and what I reiterated on the weekend video was, let's wait until Wednesday. We can afford to wait for 2 days. Let's look and see where this monthly candle closes out. Same thing for the NASDAQ. And then we assess going into the next month. But between now and then, I'm trying to send you a big warning to what? Be prepared, because we normally take the staircase up and the elevator down. There's a confluence of events happening this week. Economic data, right? We got Jerome Powell speaking. We've got earnings. I have no idea what we're going to be looking at as we get into Friday. But remember, we saw that same pattern here, or a head and shoulders on QQQ when we were still above the 50 DMA. And I said, hey, I don't like the way this looks. Volume's also elevated, so people are rushing out. I'm looking to see whether or not we're basically going to get strength, or if people are going to be looking to sell the reps. If we fall into fear and people are raising cash, it'll be fairly obvious. We're going to start printing those monthly lower lows. So the very last thing I want to point out here is that we also note that there's a lot of moving parts here. But if we look at different ETFs like SMH down, MAGS up, XLG up, RSPT a little bit down, RSP a little bit up, IWM down, and the Dow down, people are confused, probably like you and me. So with that said, if you want more information, click the video on the left. If not, maybe you want to hang out with me at 9:15 a.m. tomorrow. Thanks so much. I'll see you on the next video.